How to trade Forex. Use a fundamental analysis and correctly predict price movements. Like a pro. Do it yourself with help of Gemini. Step by step using Gemini Pro. In this video, learn how to master trading. Forget backtesting, indicators, price analysis without context. Forget trading basically solely on chart analysis. If you stay only with charts, candlestick patterns, you will definitely lose money. Unless you create a checklist like one I'm going to teach you today, which will make you more successful. Welcome to the most informative channel for succeeding in financial markets, especially focused on the international currency market, also known as Forex. Here is the first step in the beginning of the day. Analyze the global stock market trends, especially the future of SP 500 and the VIX, along with Bitcoin, to determine the risk appetite and risk aversion, risk on or risk off. These are the daily charts for 2nd December of 2025, which I will use as an example. We see risk on, right? Risk on, risk appetite, because SP 500 was going up, closed high, the VIX going down, closed down, and Bitcoin very strong going up and closed very high. It's obviously risk on, a positive day for the market. Here are the currencies that typically depreciate on days like this: Japanese yen, Swiss franc, and American dollar. But here we have to confirm, because we need to look at the US government bonds 2 year. Like this, you can see 2nd of December, we had US 2 year going down. So in this day, the USD was down all day long. Okay. Now we need to analyze which of these rising currencies, risk on mode, are experiencing hawkish or dovish dominance by the central banks of their respective countries. Hawkish means the government will raise interest rates or stop cutting interest rates. Dovish means the government is thinking about or intends to cut interest rates soon. When we have a risk-on macroeconomic scenario, the Australian dollar appreciates, like New Zealand, GBP, and Loonie, along with the expectation of rising oil prices. Here are the currencies that typically depreciate on days like this: Japanese yen, Swiss franc, and American dollar. But here we have to confirm, because we need to look at the US government bonds 2 year. Like this, you can see 2nd of December, we had US 2 year going down. So in this day, the USD was down all day long. Okay. Now let's ask the AI what is the expectation. This is the prompt. You can select, copy and paste into the Gemini Pro. You can find in the description of this video. So I passed it here and the Gemini answers me. Which specific currencies are you currently monitoring or holding position in? And I typed in the Gemini the risk on mode currencies: Aussie, Kiwi, GBP, and Loonie. Gemini says central bank sentiment and trading strategy. As you can see, the firmly hawkish is the Aussie here. I will choose this currency to trade because it's the most hawkish in this table. firmly hawkish. One more confirmation to support the hawkish. For Aussie, follow China industry, see HK50. Iron future prices in China, asks Gemini. So Gemini answers me. I ask to Gemini, what is the current trend for iron ore in China? Is rising or falling? So the Gemini answers me. You can see here. Closed higher, daily change. So you can see it's uptrend to China iron ore futures. HK50 in this December 2nd, very high day. Copper futures uptrend in very, very high prices. So, okay to buy Aussie. Now, remember when I mentioned Swiss franc and GPY as the currency that depreciates in risk on mode? So now let's choose which is the weakest currency of the day. We notice that Swiss franc rose like euro. Euro is the blue here, and the Swiss franc is the green. So they go up together. And the weakest is GPY in that day. This indicator is called the currency strength meter. You can find in the trading view. In this day, GPY was the weakest. I can trade a buy in Aussie. I will trade because it's the strongest against the weakest currency for that day. For day trading, a capital of $1,000, I can carry a maximum of one lot, but I will buy making the entries partially, starting with one-third, 0.3 lot. If the price retreats to support, I buy another 0.3, and I can still add another 0.3 to be close to one lot, which is the maximum exposure allowed under my management. My take profit will be $35 and stop loss $60, emphasizing that the success rate with this fundamental analysis is above 90%. Let's do a real-time operation simulated in the accelerated way to exemplify this day, December 2nd, 2025, on the Aussie yen. This is the 15-minute chart of Aussie yen. We see here is was the Asian section. Now we are in the New York section here. We see an error in my MetaTrader's time system. 4 o'clock p.m. is the opening of the New York section, and it's an error here, but we see the market pushed up. We see the resistance area was broken, and I wait a candle to close higher, to close green, to buy. Now I can buy 0.3 lot. Take profit is $35 or more. False breakout, but fundamental analysis is to buy. It's a pullback in the support area. I can buy again. A green candle formed. Stop loss only $60. $60. Now the market was going up slowly, and it doesn't take profits. Now is the Asian section of December 2nd. Now we can take profit. Let's see something. In that day was a news. Whoa, this was the GDP, Australia GDP data. It was below the expectation, but it doesn't change the hawkish. And I can buy again because this volatility is expected with the news. You can check. December 2nd, the Asian section, the GDP data was below the expectation. But the bias is uptrend. The fundamental is uptrend, and I stay with my buy. Now I can take profit again. This volatility is normal. News, and the market goes up again because fundamental analysis is to upside. So if you want to delve deeper and trade the major forex currencies consistently, I will leave a link in the description to my book available on Amazon.com. Have a great week and good trading.